Okay, is crude oil heading up to close this gap that we have right here? That, if you go back, was created back on October 11th. And the answer, in my opinion, is yes, we are heading up to close that gap. The bulls are in clear control of the price of crude oil. I'm actually going to break down for you these two buy scenarios, okay, which we gave our members in our trading club so that you, even if you're not in the trading club, you could learn from why these were buys based on the structure points on crude oil. So let's head back over to the 4-hour chart. And the first thing I want to show you was, and I'm going to get rid of this bubble right over here, is to kind of show you, okay, why this became our second to last bull run buy on crude oil. So we had seen this bullish engulfing candle happen right here. Okay. And so at that point, we waited for price to close right above the zone, which happened on the candle. Now, usually what's going to happen is that you're going to get some form of a bull run, a retest, and then a continuation. Okay. And that's exactly what we saw here. And my goal is that you can see it so that you can basically do this on your own as well. So let me get rid of that. And if we just draw a very simple Fibonacci level here from where price took off to where price began that reversal, which is this red candle right here, we can see that price not only came back to retest the area, but also price came into the area that we consistently look for reversals on the 4-hour time frame or higher, and that was around the 61 to 78.6 area, and that gave us the opportunity to buy again. Now, we continued with our buys up to 72.69 or so, and again, a lot of members like myself, a lot of us had cashed out our first entry at this area, but that doesn't mean that there's not going to be another entry. So when we gave our members the next buying opportunity to stack in this particular area, again, we waited for a couple of things. Number one is we waited to see that bullish engulfing candle shoot above this zone and close. And then we were waiting for price to come back. And again, one more time, we were waiting for price to shoot up, retrace, right? So this is where we find these Fibonacci levels. And this is where we find the next low to take. So again, just another illustration as we go into the analysis is, again, grabbing that Fibonacci level, right? And going from where price originally took off, which was from about here, okay, to where price definitely showed signs of reversal, okay, which was right up here. Okay, you can see here, we're having what I just showed you, which was this white movement back down. So we had price coming back into the area, plus getting pretty darn close to the 61.8. But this was a clear direction. Now, remember, just to show you again, this is what you're going to see as price is climbing. You're going to see price always doing this: up, back down, and then up. These retracements, okay, are very important. Okay, as long as they do not retrace, okay, below the 100 level on the Fibonacci level, which in this case was all the way down here, right? Retracements into this, even down into this area, are still considered healthy retracements. Okay. So you want to look for retracement levels somewhere between, let me grab a marker, somewhere between the 61.8, let me draw a little dot here, right? And you don't want price to close below the 100. Anywhere between there, you're getting great value. So had price dropped a little bit lower into this area, think about it. We're picking up price at a much better price because when you're going to buy something, you want to buy it low. So even if a candle had come further down, right, we would be buying from here, because what happens then is that your risk becomes much, much less. Because if we're taking a buy position from the 88.6, our goal is always to take it back up to the zero. But here's the fun part. You basically put your stop loss below that most recent low, which was right here, and the 100 Fibonacci level, and maybe your spread. So you're still looking at a 4.5 to 1 risk to reward, which is amazing. Okay, so that's just a little teaching and why we took those 2 buy orders. And again, we started to see this trend. And I'm going to erase this for a minute. As we began to see structure breaking, right, we were not sitting on any sells, right? This was the first place that we started to look for buys once we saw structure. So again, I'm going to tag a video at the end of this video that is going to show you market structure. Watch those videos. I've got about 3 videos on my channel on market structure, part 1 and part 2, and then one specific for crude oil. Make sure you watch those. I'll put those on the video description as well, because once you understand structure, you can stay in the same direction, right? In the same direction with crude oil, and you can avoid trying to guess where the drops are going to happen. You're going to stay more proactive, and you're just going to ride the waves up or the waves down. Now, as I go back into the 8-hour chart, because really my goal for 2025 is my videos. I don't want to do any editing. I want to just be able to give you massive value, right? And just kind of ramble and give you something that you can see. I'm not here to be flashy editor or do all this stuff. So one long continuous video, and I'm choosing not to be on camera today. I just got back from a 4-mile jog walk. I'm a little exhausted. And so I just want to be able to put this video out to give you value before the market opens. Okay. So now we've clearly broken that top of 72.87. And again, this is the area that we are looking at. And again, if you remember here, okay, price closed here on a Friday, price opened here. Okay, let me make this a little bit smaller. Price opened here on a Sunday. That space, okay, that space between here and here is what creates what we know as the gap. Okay, so again, gaps don't have to close, but at this point, I believe they are going to go up and close that gap in the market. So does that mean that price is just going to open on Sunday and boom, shoot up? We don't know that, right? So the next level that I want to give you that you should be concerned about, let's head over to the day chart. And that is going to be this level right here, which ironically enough is pretty close to that gap area, because you can see here that level has been previously used as support. Okay. We've also seen a few times where prices come before retested, right? And has also been used as resistance. So this is a key area that we're focusing on, which is right around that 75, 80 area, which is where that gap ironically also is sitting. So for now, the game plan should be that you stay bullish on crude oil. We're looking for any possible retracements back down to retest this level. And if that happens, that would trigger a good buying opportunity for you to stay long on crude oil until that gap is settled. Okay. Now we're going to trade what we see. If we do get a bearish 4-hour or 8-hour candle to close below 72.87, then at that point, we sell down. I'm going to make this candle red. We sell down crude oil to about 71. Okay. But this scenario has to be a 4-hour candle or higher to close if we are going to automatically start selling from this particular point. Okay. For right now, I'm staying bullish on crude oil. We've got open positions still riding up. And so that should be the game plan, especially for the beginning of the week. Understand that what's going to happen with the market open, okay, it may create another gap situation. And again, that is something that we trade live each Sunday at 6 p.m. Eastern Standard Time inside of the trading club. So if you want to join us, you will see the link popping in below. So if you want to join us each Sunday and every day for live analysis, head over to theprofessortrades.com. Find a package that works for you for less than $1 a day and come and join us and grow your trading accounts in 2025. And hey, if you got some value on this video, do not forget to hit the like button. That's all that I ask. It's absolutely free for you to do. And if you're brand new, subscribe and hit that notifications bell. Happy Sunday, and we'll see you on the next video.